that sounded interesting to me, and I thought that this is real, right? This is the stuff that you read about in the newspaper, and you cannot generalize commodities. You need to be very careful about.
I'm delighted to welcome Martijn Bron, a seasoned commodities trading expert with over 20 years experience in the industry, including a long tenure at Cargill, where he became global head of cocoa and chocolate trading. After driving innovation in trading technologies, he left Cargill in 2023 to start his own consultancy practice, advising companies on trading strategies, risk management, and recruitment. Martijn is a LinkedIn top voice and co-host of the Strong Source podcast, where he discusses market trends and shares his insights.
We have seen empty shelves of coffee in Holland, and I've seen chocolate prices going up dramatically. That is what I understood was the purpose of my job. But executing it with confidence, that was a whole different ballgame.
It's a challenging environment, there's no doubt about it. It doesn't matter if you're new to trading or, like you say, a veteran, there is no crystal ball.
A lot of youngsters, they have no patience. By the way, look, I think climate change is quite often used as some kind of a scapegoat, as climate change is used as one of the key drivers of the current market disruption.
Do you think there's more behind that?
Yeah, there is a huge amount behind it, but that is too complex for the mainstream media and also the general public to go into that. You may have the right S&D in your hand, you may have the absolute truth, but it may not play out in the next 6 months. The market is trading technicals, then you would be stupid to ignore it and to be arrogant. If you do not have a strong fundamental bias, then it feels like a feather in the wind.
You've seen 30 years of that, and obviously that stood the test of time for you. We're now seeing AI being introduced into the markets. Do you think that's going to have a major factor over the next 10 years?
It's nice also psychologically to be optimistic and to hang on to this idea that in 10 or 20, 30 years, the markets will be higher. And you can just own that stuff and sit on it. It doesn't cost you anything.
What kind of a legacy do you want to leave behind in the commodities industry?
I would be very careful with that, and I would advise people to think about, okay.
Hello and welcome back to
Two Blokes Trading, Two Blokes Trading, Two Blokes Trading
podcast. And for sure, you're going in the right direction.
It wasn't as bad as it is now, to be honest.
But sent again. That was it. Hello, Martijn, and thank you so much for joining us today. It's a real pleasure to have you on our podcast today. Obviously, you've got a massive experience in commodities trading. I believe it's 27 years. Is that right?
Yeah, that is correct. Yeah,
and that's a long time in the industry. I mean, obviously, we're going to try and pick your brain a bit throughout the podcast. But why commodities? Like, was this a personal choice, or is it something that you kind of got thrown into?
Maybe a combination of both. So when I graduated from studying economics in Amsterdam, I wanted to work in an international environment, a commercial environment, and also in something physical. So I thought about the banking industry, but the more I thought about it, I thought that physical things, so shipping, moving stuff, processing stuff, would be more interesting. So that is how I thought about the commodities industry. But at the time, we're talking the late 90s, there wasn't so much known about the commodities industry, and there was barely any internet, and so I was dependent on visiting career events at universities, and then actually I saw a recruiter from Cargill, and that looked like a nice guy. He was an engaging presenter, and the stories he told about Cargill, a company I'd never heard about, but basically what they did. So trading goods around the globe. I mean, that sounded interesting to me. So that's basically how I ended up in the commodities industry. And what helped as well is the vibe of the trading desk that I saw when I applied for a job, and I saw all the excitement. I saw a factory. I saw boats, huge boats filled with grains next to the office, and I thought that this is real, right? This is the stuff that you read about in the newspaper, and I thought it would be fascinating, and it turned out to be fascinating.
I can only imagine. What does it look like though when you first go in 27 years ago to obviously how traders are going into the industry nowadays? Like what does it actually look like for you personally, and how
Yeah.
are people trading?
Now look, it was a trading floor, so it was a floor with like 6-7 desks, organized by different products, and in the Amsterdam office we were trading grains and oilseeds, and the onboarding was very old school. So there was a free spot at a trading desk. I had 2 screens, a phone, and we saw some screens that everyone was looking at with Chicago Board of Trade futures, and then the whole day, basically, the phones were ringing, and then you needed to listen to suppliers and clients. Being part of meetings where in the beginning I didn't understand anything because the vocabulary was just very different than what I learned at the university. Yeah, and what it is, it's a lot about listening to the conversations that seniors have, and then also slowly but surely trying to connect all the dots. So everything that you hear, you need to translate to the numbers that you see on the screen. Because at the end of the day, that is what it's about. The number on the screen that you see is a price of a commodity. Now, that is the price of the day. The job is to assess what is fair value for that commodity. Where is it going to go to? Is it going to go up or down? And relative value and time spreads and all those things. In the beginning, you have no clue what those numbers mean. The point is that along the way, that is basically your job that you need to assess. Okay, this is the number on the screen, and this is actually how it translates to a farmer somewhere, maybe in the US, a corn farmer, but also to a final consumer and the product that you buy in the supermarket, right? Now, there is an interesting debate still today about working from home, and Jamie Dimon from JP Morgan. He was very outspoken about it, and I did recently a podcast with the head of World Trading Group, that is basically the agricultural trading arm in Cargill, Alex Amphilio, and we also discussed with him how do you look at working from home. One of the key things is that in the office environment, as a trader, you learn a huge amount from sitting on a trading desk. In an open outcry environment, and the whole day you're basically talking. You're discussing, you're challenging each other, you're coming up with ideas. And you do that from looking at the screens, looking at the numbers, consuming a huge amount of news from all over the world, and with that news, updating your S&D analysis. And that is basically what you talk about the whole day. And it can be very specific to a commodity, but it can also be macro related. It can be very specifically something that is happening in-house. But at the end of the day, you are digesting a huge amount of data, information, and that you need to translate into, okay, this is what it's going to mean for the S&D and thus the price. And then you need to translate it into a risk-bearing position in the market very quickly. That is what I understood was the purpose of my job when I started. But executing it with confidence, that was a whole different ballgame. And that took me, say, 2 to 3 years. And that's also something that I think a lot of youngsters nowadays underestimate. A lot of youngsters, they have no patience. You need to be careful not to generalize too much, but let me say that's my experience.
Sure.
And that there is very little patience, but you need to really spend the time in analyzing markets, analyzing S&Ds, being challenged, learning to to defend your case, and also dealing with the fact that you've done all your homework, you've done your analysis, you've been challenged, and then you put it out in the market, your position, and then the market goes the other way. Yeah. So,
for sure.
and so all those things, take time.
It's a challenging environment. There's no doubt about it. It doesn't matter if you're new to trading or, like you say, a veteran. You know, there is no crystal ball. And and tell me, like, going into that environment, was it a cutthroat environment, or were people willing to share their information with you, especially as a new trader? You know, what was that environment like? How much can you learn from these guys, and how much are they actually sharing with you?
Yeah. Now, the environment, the years in Amsterdam. So the first 6 years I was in Amsterdam, that was a very collaborative environment. It was not cutthroat at all. It was really designed to set you up for success. It was although it was intense and tough, it was at the same time very friendly. So there were people willing to really to teach you things.
Sure.
And because that's in their interest. When you hire someone, it is in your interest and in the company's interest to set that person up for success. Yeah. So certainly that was a very collaborative environment, and not only in the office but also outside of the office. But the first years, my life was that. Yeah. So it was trading throughout the week, but also during the weekends. Most of the days in the weekend, I saw my colleagues in Amsterdam. So now, then I went to Geneva. After 6 years, I went to Geneva, where the global trading hub was and still is. And I wouldn't necessarily call it cutthroat, but it was more a type of mercenary environment, whereby you had a concentration of people from all over the world
vying to be top dog.
Yeah, in Geneva, Geneva as a trading hub, not only for Cargill but also for other, large trading companies. Yeah, the P&L driver, the individual P&L and individual money making opportunities, that is the driver for a lot of people, not necessarily the strategy from the head office.
Sure.
But it depends also a bit whether you are working in a physical franchise or whether you are working in with clients, or whether you are working in a purely proprietary trading environment.
For sure. And conditions, like, obviously 27 years, you've seen market conditions change a lot during that time.
Yeah.
But we're certainly in now kind of a super cycle in commodities right now, right? And like, how do you see that cycle now? Obviously, we've seen a big shift. I mean, like, we're seeing cocoa hit all-time highs. We've seen a pullback, and then it's rallying back towards that all-time high again. How different were the market trading conditions back when you were trading 27 years ago to what people are trading now at the moment in this cycle?
Now, look, I want to be a bit careful with that super cycle statement, because whenever I see it flying by online, I always think it is some kind of marketing story from banks selling something. Banks, they refer very often to commodities as if it is one asset class. You can say commodities are an asset class, but now trading cocoa is dramatically different than corn and wheat, and so you need to be careful what commodity you're actually talking about. And you have plenty of commodities people hardly know because there is no futures market, right? As an example. But look, there is a great book about this topic. Maybe you've heard about it, but I've referred about it very often. It's called Commodities as an Asset Class. It is written by my former colleague and friend Ivo Sarjanovic, and he talks about, well, basically what the title says, how you need to look at commodities as an investment, or as a trade, as an inflation hedge. And his conclusion, I fully support that. And when the good thing about that, reading that book, is that you will understand how his thought process and my thought process is. What you read in essence how we are trained, how we have been trained in all those years. And the conclusion to us is, you cannot generalize commodities. You need to be very careful about considering your edge as an individual trader, professional, let alone retail, when you want to trade those commodities. Obviously, now everyone talks about gold, right? There's an inflation hedge, as a safe haven. I think people who own gold have never made the effort of going through the S&D. They have no idea, right? They just buy maybe a trend, or they buy a narrative, but that's not trading. It's either gambling or long-term investing. Now, and what you mentioned, cocoa, but also coffee. Those are markets that gain the attention from even the mainstream media. Because of the big moves, and also because people in the retail segment, and so basically the end consumer, they notice something that is happening. We have seen empty shelves of coffee in Holland, and I've seen chocolate prices going up dramatically. So a super cycle in terms of a general statement, I would be very careful with that, and I would advise people to think about, okay, what commodities are they talking about? It makes a hell of a difference which commodity you analyze. And then in terms of trading, I don't trade cocoa at the moment, or since I left, I didn't, because I knew I would lose my edge.
Right.
And so you need to be very conscious. Excuse me?
Is it access to information, or
what is
it?
It is. Look, I had access to the best information for many years, and trading that market profitably was very difficult. Now, let alone having only access to public information that you get from brokers and have no proprietary information. You need to be very conscious of that, and especially these commodities are. And again, maybe now I generalize myself, but are not like trending markets like the S&P 500. Look, I don't know what the S&P 500 is going to do next week, but do I think with a high level of confidence that the S&P 500 is higher in 20 years yet?
Yeah.
Okay. Coco, I have no idea.
Right.
Yeah.
Nobody does, right? And that's the thing. But I mean, tell me, how much we talk about information and having that information to hand. Did you use technical along the way as well? Was that ever part of your kind of strategy or process, or was that something you just stayed clear of and you just went purely kind of fundamental?
Look, I was trained fundamentally, and that is very important. And it may sound weird, but for the first years, I traded sunflower oil, sunflower meal, rapeseed oil, soybean oil. Sunflower oil and rapeseed oil, they have no futures. Soybean oil, they have futures. But technical analysis was really not important. What was critical was understanding the fundamentals, and fundamentals not only really S&D, but also understanding the other participants in the market, the order flow. Order flow is so
supply and demand and so on.
Who is selling? Who is buying? Who needs to sell? Who needs to buy? Those type of things. So we spent a huge amount of time of identifying who were all the market participants, and we're talking traders, consumers, processors. That's all fundamental analysis. So for Sonal, I don't think I've ever used technical analysis, because when you have a physical market, it's very difficult to make charts out of that. Maybe now technology enables that, but there wasn't a market that was driven by technicals. Maybe Chicago Board of Trade a bit. Later, it became more important, because that's also one of those things. You need to figure out what is driving the market at the moment. It may well be that it is fundamentals, but it can also be that it is purely macro, or that it is technicals, or that it is order flow. So you need to be very conscious of, you may have the right S&D in your hand, you may have the absolute truth, but it may not play out in the next 6 months. So although technical analysis is, well, within Cargill at least, is not perceived as some kind of a higher science, people looked at charts more as kind of an idea where you are on the map, not necessarily where you go to. So what you can see on the map, you can see market extremes. You can see, you can see the highs and the lows, how long these markets have been there, those type of things.
Helping with timing of entries potentially.
And look, when the market is very thin, you can you can look at stops, these type of things.
Yeah.
But the real money is made with big positions, basis of fundamental. You're not gonna have a huge position where you are extremely confident in, and then being stopped out completely on a chart level. That's not really trading. Huh?
Absolutely. And how much does sentiment come into play then with
sentiment?
I mean, it's surely that's getting more and more in terms of how people perceive things, and that markets are definitely becoming more reactive around information right now, right?
Yeah, sentiment is very important. And look, with all those things is like, well, you can have a view. Say, for example, go back to technical analysis. That technical analysis is not something you're very impressed by. But if the market is trading technicals, then you would be stupid to ignore it and to be arrogant. And so, as a trader, you also need to be open-minded for things that maybe not your edge. But if you know that the market is trading the whole day about technicals and they have no idea about the fundamentals, then you need to adapt your approach to that. But what I've learned is, especially when trading size and trading through turbulence, if you do not have a strong fundamental bias, then it feels like a feather in the wind.
Yeah, 100%.
Yeah. So it is much easier to sweat out turbulence with size when you have the fundamental views, and maybe making a bridge to the equity markets. Of the last month, basically 6 weeks. A lot of people they got hosed because they were stopped out. Basis technicals, basis position breaches when volatility shot up. Basis leverage.
Mm-hmm.
Yeah. And guess what? What happened, right? So that's what the way I describe it is. Those people they have positioned themselves such that they would be running a large risk of getting stopped out.
Sure.
Yeah.
Mm-hmm.
Now that is a pity, right? So in trading, what it is, and you need to make sure that you are positioned such that you can sweat out that turbulence, because turbulence is always going to happen.
Sure.
Yeah.
But
and
how do you balance the risk though with that turbulence?
Yeah. Look, with equities, to an extent, it's easier because you can equities and investing. Let me put it that way. Investing is a long-term thing.
Sure. Mm-hmm.
Yeah, you can own the S&P 500 and maybe wrong today and tomorrow and think, well, look, I own it for the next 30 years. But it's something very different than trading a commodity, whereby you actually trade to go in and out. It is a much more shorter to medium term trade. Can be a couple days, can be 3 months, can be 6 months. So yeah, you need to think about what is your goal, what is your edge, what is your horizon.
Sure. And with that, I mean, obviously, talking about edge, and like you previously stated that curiosity is key for traders.
Mm-hmm.
I mean, how do you foster that trait in yourself, and why do you think that's vital?
Curiosity, that is something that indeed every trader will likely mention, and it goes with a certain skepticism. They're not the same, but they are equally important. What do I mean with it? Well, curiosity is that you have an open mind, that you want to explore things. Because as a trader, you start with a blank piece of paper, and out of that, you need to generate money from the market. You need to generate money from other people. So you need to be curious about, why are things the way they are, and where could they go to? And so you need to enjoy doing an analysis, and you need to enjoy having a debate with other people about the market. You need to ask people questions, and
Absolutely.
so you need to be curious. Now, why is skepticism so important? Because you need to constantly think, hey, why is this person saying this to me? Could this be wrong? Yeah. So and also think about in financial markets, there are a lot of people who are bullshitting. There are a lot of people who are after your money.
Yeah.
Yeah. And so think about what is someone's incentive to do something with you in the market. If you are buying, the other person is selling. Why is that? So that is combination of being curious, but also being skeptical and think, okay, look, I have this game plan. I've figured it all out. I'm going to buy this thing, and I find a seller. Why is that? And why do people give me the opinion? And very often, I've experienced that often in events where the advantage of being present in the industry for a long time is that you know the characters in the market. I knew it's when certain people were saying things to me, they said it to get my reaction, not necessarily because they really believed in what they said.
Right. Yeah.
Eh?
Yeah.
So you learn to become cautious and skeptical and think, well, okay, he's saying that because he wants to see my reaction.
Sure. Absolutely. It's key. I mean, it's a mind game as well, right? And in terms of like having a process, obviously we all go through periods of losses. How do you actually then, do you feel like you've lost your edge? How do you turn that around? And how do you kind of identify and learn? Do you have a process in terms of how you go about
Yeah.
that?
Yeah, absolutely. Look, you trade the smallest when you trade shit. It's a bit sometimes like being a striker in football.
Confidence, yeah.
You at times you're not playing well. You're not trading well, and that happens, right?
Mhm.
So you go through you go through cycles, not only through market cycles, but also through cycles with your own performance and how you feel. Huh? So you on the one hand you try to prevent emotions to have an impact on your decisions, and you do that by having a process indeed, and a process with a team, whereby you you have process for all kinds of things, but for example, you can say, okay, for a certain flat price exposure, you list a number of variables, and you give them a weighing, and then you rate them, and then a number comes out of it. And then, regardless of, for example, your gut feel, which you may have when you come into the office on a Monday morning, you say, well, okay, guys, this may be the gut feel. I'm bullish, but now we go through all the elements with the team.
Data is data.
We come to the agreement that we have a slightly different rating, and that's not super bullish. That's a process. Yeah.
Sure. But do you ever find with that many people kind of talking together and working something out that you can overanalyze things?
Well, that's an argument that you sometimes hear. Some people say, well, that's trading by committee, and some people that they don't like that. So that's also something that you need to figure out as a team and as individual traders. What suits your character? What suits the setup? And so you have environments where traders, they want to be responsible for their own decisions. They like to trade alone without any distraction, and the distraction can also be too much information. Yeah.
Sure.
But there are also environments where traders actually like trading by committee, trading in a team, so that you can constantly bounce off ideas, and that when you feel like, well, I'm not convinced, that you have someone else in your team who is, and you say, okay, well, I trust your judgment, and we go with you, right? That is also the argument of meritocracy, whereby, and that's something that I've tried to apply over the years, not in the beginning because that's not easy, but along the years, when hiring young people, to accept the strength of the argument and not trade by authority. Yeah? So I think it's important that you create an environment where, on a trading desk, where people feel like, yeah, okay, my argument counts, and it doesn't matter whether I'm a trainee or whether I have 10 years or 20 years of trading under my belt. Now, experience is important, but I've I've experienced many times that very young people without experience had fantastic arguments and really great analysis, and that I was kind of blown away by that and thought, hey, that's great. We go with you. I haven't thought about that. And experience can also create well, sometimes maybe a bit complacency, or like I've seen all these things before and it's going to happen like that again, and therefore it's good to have fresh people in the team with fresh perspectives.
And do you think emotional intelligence is key within that?
Yeah, it is that is very important, because you work in a highly tense environment. Now, it's obviously the risk of things going wrong is very different than, for example, in a hospital, where as a surgeon makes a mistake, it can lead to someone dying. On the trading desk, it's just money. So we need to also be clear about that. But it's a very intense environment. I've always described it as being in a trench, in a war situation almost. And yeah, you need to be very much aware of how everyone is doing in such an environment.
Sure.
And yeah, and also when you work with people from very culturally very different backgrounds, you need to be aware of, how they deal with criticism, for example.
Sure.
So the Dutch deal with criticism in a very different way than people from Asia, for example.
Sure. I mean, you guys are very straightforward. I think you know what you're going to get. It's face value, I believe, more so especially with Dutch people. That's what I found anyway, for sure.
Yeah, the Dutch.
You know where you stand.
Yeah, the Dutch are candid, and they are comfortable with giving and receiving feedback in a group environment. And there are other cultures where that is ineffective, and whereby you can provide criticism, but then maybe better on a one-to-one basis. And that's important on a trading desk.
For sure. And just jumping back into the kind of current market dynamics as well for current traders out there at the moment, are we entering into a kind of a more protectionist kind of era? And what do you think that means for commodity traders moving forward?
Yeah, you mean related to the whole tariff situation?
Tariffs, exactly. Yeah.
Look, the thing with the tariffs is, and this is also, we need to be honest about that. Yeah, no one knows. Yeah.
You know, for the next 3 months.
No, but no one knows what the policy is going to be. You need to be, and those who pretend to know that, the same with strong opinions about interest rates and what the Fed is going to do. Look, you need to be humble in that respect. Look, what I believe is that the markets will find their way, and the markets will continue to trade and to resolve. Look, products are being produced and mined, and they will be shipped to places in where they're being consumed. And at the end of the day, yeah, the consumer needs to pay. That's the thing, yeah. But the point also is, when the consumer can't pay it, yeah, demand will decline. The whole purpose of commodity markets and prices is to steer behavior of suppliers and behavior of consumers. That is what the purpose of prices. So yeah, protectionism. Look, like I said, I don't know what's going to happen with these tariffs. What I believe is that in the US, also in the government, there are sufficient number of people who I think understand that free trade is the most efficient way of operating.
I think we've seen that again today, with Europe and the UK coming to some kind of a conclusion. I think it's kind of one foot back into the kind of Eurozone potentially as well with the UK. So like I said, we don't know, everything's on a shoestring at the moment. But in terms of as well, like global alliances, obviously we've seen BRICS. Is that changing commodity flows as well?
Well, look, whether it's BRICS or whether it is all kinds of other geopolitics, you have seen what I found very interesting is the invasion of Russia. Sorry, the invasion of Ukraine by Russia, right? what happened with the energy markets at the time, but also with the grains markets. Very, very much disrupted. But at the end of the day, these markets normalized. In the beginning, it's like, oh, and the same with COVID. In the beginning, it looks like the whole setup is disrupted. Yes, indeed. And then the media jumps on it. But the point is, all those players in the commodities industry, their business model is designed to adapt, to change their supply chains and adapt to it and to benefit from it. So when those things happen in those commodity companies, people stick together and say, okay, this is what is happening now. What will be the impact on trade flows? What is our role? What are our competitors going to do? What is the consumer going to do? What are suppliers going to do? And how are we going to benefit from it?
Sure.
So now the thing also is, and I've written about it very often, there is some kind of desire by regulators to step in and especially towards their what they call their stakeholders, their voters, to come in and show that they're doing something about these disruptions. But it makes things usually worse.
Sure.
The market will figure things out. If you look at the energy crisis, which happened after Russia invaded the Ukraine, when European gas prices went through the roof. The UK government tried to do something about it, right, with the energy price cap. They tried to do it in Europe as well, but the market didn't like it, right? You recall, and the UK bond market, that didn't like it, and that was the end of the Truss government. The Europeans and also the Dutch government, they also implemented an energy price cap. But what really happened, which was one of the causes of markets to normalize, was the Europeans reducing their gas usage by putting their thermostat from like 21 degrees to 18 degrees. Now, fortunately, there was a mild winter, but the European gas usage went down 25%. That was the main reason, in combination with LNG shipments into Europe, of the market to normalize. There was no need at all, in my mind, for market regulation. Now, so all those things, the market will find a way to at the end of the day, to enable sustainable, efficient supply chains. And there is no one bigger than the market. And things like price caps or price floors, those things, they don't work. Because they disrupt the normal behavior of humans.
Yeah, but there's so many mitigating factors when you're trading commodities, though, as well, right? There's so many. I mean, look at like climate at the moment. Obviously, there's massive risks with potential issues down the road as we see the change in our environment and our climate. Like, how is there ways to adjust to this? I mean, like, with so many like moving parts, that's when you talk about curiosity, I think that's the key for a commodities trader, right? Because there are so many mitigating factors that you have to take into consideration.
That also makes the job interesting.
Absolutely.
Look, the thing is, sometimes people said to me, yeah, but Martijn, after 25 years, you're in a comfort zone. I said, look, I've never been in a comfort zone because there's so many moving parts and there's always something new. By the way, look, I think climate change is quite often used as some kind of a scapegoat as well.
Okay.
To explain things. You see it in cocoa, for example, whereby climate change is used as one of the key drivers of the current market disruption. It may be, there is a huge amount behind it, but that is too complex for the mainstream media and also the general public to go into that. And that is what you need to realize. And going back again to Trading Edge, there are so many professionals, they spend their whole day in analyzing one or two commodities. Now, if it was just climate change, then it would be fairly easy. But there are so many different things and so many different complexities.
Fragile supply chains.
Yeah, absolutely. And so you need to be in that to understand that. And you need to have experience from being in an origin. where these commodities are grown or where they are being mined. And you need to have experience with the behavior of the end consumer, not even you and I in a supermarket, but the large, fast-moving consumer goods companies, for example, how they behave.
Yeah.
It's a fascinating industry. I found it extremely interesting still. And if we go back to when I started, what I hoped for to find in that industry, I found that, and it helped me to better understand how an economy works, and also helped me to understand why regulators often make mistakes, because they haven't done the job. They don't know how these markets work. Yeah.
For sure.
It's the same with the housing market, as an example. At the end of the day, that's a supply and demand situation. But the housing market is very much regulated, and therefore it doesn't function well.
Yeah, absolutely. And like without a doubt. But I suppose going back as well, like we've got renewables really kind of coming to the fore now as well, right?
Mm-hmm.
Do you think that's a threat or an opportunity for commodity traders?
Look, I think it's an opportunity, because if you look, for example, in Amsterdam, there are a couple of companies now trading renewables that were not there 10 years ago. Some really fantastic companies with a lot of talented people from all over the world. And Amsterdam is both a technology hub and a finance hub. And finance meaning also trading. So you have lots of trading companies in Amsterdam. Yeah, and a lot of the growth has come from the renewables. And that's great.
And ESG factors?
Yeah, look, the thing is, with ESG, that has been a label which I think was very important in the equity markets the last couple of years. But if I look at what Larry Fink, now who was one of the drivers of that, Larry Fink, the CEO of BlackRock, the biggest asset manager in the world, in his last shareholder letter, he didn't mention it.
Seems to die off a little bit, yeah.
So yeah, I think that as a label, I think it has become less important. But each company needs to take their own responsibility, of course.
Sure.
At the end of the day, and this is a critical thing here again, I'd like to emphasize, because you see very often this question: who's going to pay for that?
Yeah.
Well, you're going to pay for that. Yeah, the consumer. There is no kind of some kind of black box who's going to take care of that. No, it's you, the consumer.
Absolutely, it always filters.
The same with inflation.
Yeah, absolutely, 100%. And I suppose, like, I'd love to know as well with throughout your journey is question I'd love to ask you: has there ever been a point where you've kind of had ethical considerations within trading? There has been.
Absolutely.
And how do you balance that with profits and so on?
Yeah. So, look, when you trade commodities, you often come to places which are very different than here in the West. More complex, very different cultures, different way of doing business. Where, for example, a bribe can be part of business, and they wouldn't necessarily see it as a bribe the way we define it. So I've come across these things, and also where people try to put you in a position of dependence, tit for tat, all those things. Yeah, so you need to be very not naive about that. So how do you deal with it? Now, in my experience, it was very clear. So there was no gray area. So you knew, you were trained that you know what ethical is and not ethical, and you have to behave accordingly. So then it makes it actually quite easy, in the sense that you know how you need to behave, and it also means that sometimes some opportunities are not for you and they go to another company. But over the years, I have always felt very comfortable because I knew what the rules were. Yeah, so there was no reason to doubt. There was also not a problem to miss a business. There was not a problem of feeling like, now I'm disrespecting my counterparty, because our values were more important than that.
Right.
Yeah. So, and look, this is a very important part of culture, not only in a country, but especially in a company where you know what the culture is and where people need to walk the talk. So yeah, how you learn these things, you travel a lot and you travel with seniors and you see what they do.
Yeah.
They give the right example. And
Yeah,
and
right.
also and also when I was that senior and juniors were trading with me, I was very much aware that they looked at me.
Really
I
agree.
give you a very very simple example, but it's more like a metaphor. But I've been in London many times, and the habit in London was when you jumped into a taxi, they would give you a receipt with nothing on it, and I always refused that. I said, look, you need to write the amount on it in your handwriting, and I want your autograph because I never felt comfortable with taking in a blank receipt at home, then filling in the number and kind of making up some kind of autograph, and then submitting that to the travel expense team. I never wanted to have like the hand on my shoulder and saying, "Hey, Martijn, this is your handwriting."
Sure, sure, sure. But
That's a
that
simple example, right? But
yeah,
there are many examples, small and big, where you know, okay, this is what I should not do.
that was a good example, right, of something that you could potentially kind of have a small gain from, right?
Yeah,
But I'm sure there's examples where you could have had a massive gain from, and unfortunately, in the world that we live in,
yeah,
money talks, and people kind of throw ethics out the window in so many ways. Well, not everybody, but lots of people will
yeah.
for the big gain, right? And
You
that's
need,
the problem.
yeah, but you need to think long term. You need to think long term. And you need to think of reputation. There are many good things that, for example, Warren Buffett has written about it uh, in his shareholder letters. Now, and there's also a very good book. It's called *Sapiens: Brief History of Humankind*, which really shows what the impact of corruption is to a
Right.
society and to companies and to countries. Yeah, when corruption becomes a business model, there's lots of inefficiencies that enter the economy, and that's long term is very destructive.
Yeah. You don't need to look any further than the industry that we're in, unfortunately, especially for the real retail traders out there that are looking to get into the markets. Unfortunately, it's filled with these types of people, but we won't go there today. But look, we're seeing a credit crunch in the US right now. Yeah, that's going to flow down, and there's potential recession on the horizon. I know people are talking about it for a long time, and once we hear about it, it generally takes longer than we ever expect it to happen. But there's definitely potential now, especially I'm seeing more and more about the kind of credit crunch. How much of effect will a recession have on commodities, and are they strong enough now to kind of withhold that?
Look, let's answer it only in the assumption that there is going to be a recession, yeah, because we can have a long debate about that. But let's say that your hypothesis is there is going to be a recession. Well, what traders will do, yeah, is to apply the demand impact on their S&Ds.
Right.
That is what's going to happen, and per commodity that's different. You have staple goods
Sure.
and you have non-staple goods like chocolate, for example. And in the 16 years that I've traded it, there was only 1 year where I experienced a material decline, and that was in 2008. That was really the general big credit crunch, and that was a massive decline in global GDP. That caused a demand shock in that specific commodity. For the rest, I've hardly mentioned it. Now, so you can't here again you can't generalize, but every trader, every professional trading entity, they will make scenarios. Yeah, that's already happening now, whereby they say, well, okay, we have a short
Price it in.
a short recession, and what does it actually mean? Because look, in COVID, we had a recession, but that lasted only 3 months. Yeah, and is it an intense recession, and is it focused on North America and Europe or Asia? So you need to be careful with generalizing these things and also applying it as a one size fits all. So all these trade houses, they are already making these scenario analysis and translating that into how S&Ds behave, but especially on the demand side, because on the supply side, it's different. For example, with certain tree crops like cocoa and coffee, whether there's a recession or not, you can't change anything on the supply side.
Yeah, absolutely.
Yeah,
100%. And I suppose it's really interesting that we've gone through all of this so far, but I'd love to know, you a bullish or a bearish trader? Do you prefer buying into the markets, or do you find when markets fall, there's actually something I heard not so long ago was, when markets go up, they go up like stairs. When they go down like a lift. Like, especially in commodities as well.
yeah.
Like,
Now, look, the thing is
preference?
that, what is interesting, the panic, when there is panic in equity markets, is always down, and in commodity markets is always up.
Right.
That's interesting, right?
Yeah.
Because you can't when there is a shortage in commodities, you can't easily adjust the supply side. So that's why the panic is usually up. And on the buy side, it's usually not that all of a sudden the demand side is gone. Yeah, that is something that goes much slower. And a lot of commodities, they're stable, whether it's energy or food. So that's why the panic is always on the upside. On the equities, it's down because obviously no one is forced to buy. And when the markets are down, people feel like that it all goes to zero, right?
Yeah.
No one needs to buy stocks, while you do need to buy wheat and corn and soya, right? Now, look, in equity markets, it's much easier to be bullish, to be like a perma bull, because the track record is so strong.
Mm-hmm.
Yeah, it's nice also psychologically to be optimistic.
Yeah.
And to hang on to this idea that in 10 or 20, 30 years, the markets will be higher. And you can just own that stuff and sit on it.
Yeah.
It doesn't cost you anything. Now, that's very different with commodities, because, carrying commodities is costing money, right?
Yeah.
It's the storage, insurance, it's financing. Roll costs are generally expensive. Now I've noticed that also in cocoa and other commodities, it's generally easier to be bullish, because also the upside is not unlimited per se, but they feel like it's at times unlimited. While when you're short, what is your upside as a trader? There's not that many things that go to zero, right? So how much can you make? You can make 100%.
Yeah.
When you're bullish, you can make multiples, right?
Yeah,
so it's easier to be friendly, to be bullish.
Side.
Yeah.
And you've seen 30 years of that, and obviously that stood the test of time for you.
Mm-hmm.
We're now seeing AI being introduced into the markets. Do you think that's going to have a major factor over the next 10 years?
I think that the ability for traders to analyze a large amount of information and data is becoming easier. And so as a trader, you sometimes receive a report of multiple pages with a lot of numbers, and there may be a time where AI then says, "Look, this is the recap, and this is how your S&D is changed." And so, for example, if you look at what I would like to have if I would be still on the trading desk, every quarter you have the results from FMCG companies, whether it's Hershey or Mondelez, Mars, Barry Callebaut, you name them. It would be great, and I think that is something that AI should be able to do, is to analyze all those different reports and investor calls that are all in different formats, and they're using all kinds of different definitions for the numbers that they present, that actually is translated into something that we digestible, something that we can act upon. So something that is uniform, is that the way you say it, maybe?
And working from facts as opposed to working from a broad
exactly.
data,
And that you get a report and say, okay, we have analyzed all these different reports, and this is how it impacts your S&D, and these are the the executive recaps, these type of things. So it makes it much easier to to digest a large amount of information. Because look, that is what a lot of traders at the end of the day spend their days with, is digesting information.
Analyzing and digesting.
Yeah, and analyzing that and translating it into an S&D, because that's what I often said to my research departments when I received a very good report. Maybe Nestle did a quarterly results call, and then I received a very good analysis of that call or recap, but then there was no conclusion of, okay, this is how we're going to change our S&D. And that's the only thing I'm interested in at the end of the day. I'm not reading it to understand what Nestle stock is going to do. I'm reading it to see how such a large player is going to adjust their consumption behavior. And that is important for my S&D. That is what I want now. And I think that AI can certainly help with something like that.
Sure. I think there's two parts to AI. It's about, we all talk about trading edges, but like, I think AI can certainly help you with a trading edge, but at the same time, not make a decision. I think you have to build your own bias. And I think the longer, like people who are trading for longer periods of time will just have an inherent bias anyway in the market. We understand information as it's coming to us and we can adjust to it. But having, like I said, AI and what we've been building for quite some time now is just something that can kind of give you that information a bit quicker to utilize and make decisions quicker in the markets.
Now you use that word bias. What AI could do is it could help you prevent confirmation bias. Confirmation bias is one of the most difficult things to deal with as a trader. Now, I give you an interesting example. So every day I can make an analysis and can list 10 bullish variables and 10 bearish variables. Yeah, every trader can do that. Okay, but I need to do something. Suppose we tip the scale to the bullish side, and I'm going long in the market, long flat price. You will notice as a trader, or every trader, a professional trader listening to this, they will confirm that you're more receptive for the things that are confirming your bullish view. Then the market goes against you. The market starts dropping. Automatically, still, you're looking for the news that is confirming your length. Okay, then you're stopped out. We talked about this, but let's say the market has gone against you and your fundamental view wasn't strong enough, or basically you have a P&L drawdown. Can also be you're stopped out. You're flat. Nothing changed per se in the market, but what you will notice is that all of a sudden, when you have no position anymore, you are as receptive for the bearish arguments as for the bullish arguments, because you have no position anymore. That's very striking, but that is how the human mind works.
It's a strange kind of clarity that you've because it's not something that you generally think about because it's conscious,
it's just how the human mind works. So what I think what can happen is that with AI, you could create an environment where you feel like, well, okay, I'm constantly reminded of other elements that are driving the market, and you need to be open-minded for that. And this is why the balance that you need to seek as a trader between being confident but also being open-minded for that you are maybe wrong, is critical. But that is not easy. Because confidence is important, but being open-minded that you're wrong, that something has changed or something in your analysis is flawed, is as important.
Absolutely.
Now
and
then
more from losing than you do from winning, right?
Yeah, look, it's also true, and that is why it helps that when you're in a team, you have someone saying to you, "Look, I disagree with you for these and these reasons." Yeah, and the thing is, with a meritocracy, of course, it you need to look at who says this. Is this person a perma bull? Is it a perma bear? Is it someone with a huge risk appetite? You also need to weigh all those things. But it's also the fun thing of being in a team with different characters. Yeah.
Absolutely. 100%. I suppose it's a trade-off, and it depends on the
Yeah.
type of person that you are and
Yeah.
the dynamic of the team that you
Yeah.
have. Because there's nothing worse than kind of being bullish on something and then somebody in your ear saying, "Oh, I don't think this is going to happen for this reason." You pull out of that trade and that trade goes bullish. You're going to go, "Well, why didn't I just listen to myself?" So
Yeah.
you have to trust everybody, right? I think there has to be an element of like, we're going to win some, we're going to lose some, but
Look,
overall, we're going to win in the long run.
It is learning by doing and through market cycles. And you may have heard before is that, as a trader, you're 60% right, 60%. When you're 60% right, 40% wrong, you're doing already a great job. Yeah.
Absolutely.
But
it's not just about knowing the market direction, though. It's about the timing of the entry, right? And
it's timing and sizing.
Yeah, absolutely, 100%. I couldn't agree with you more there. That's for sure. And tell me, like like I said, it's 30 years. You've taught a lot of people along the way. You're doing your own podcast, which I'll mention in a minute, and you're also kind of sharing your own consultancy work as well. What kind of a legacy do you want to leave behind in the commodities industry?
Yeah, someone who genuinely enjoyed what he was doing, and someone who was willing to teach other people, and someone who was candid and said things to explain things to explain how things really work without any kind of corporate fluff or incentive to sell something. No, I'm completely independent, so I can say whatever I want to say. And that is what I do. What I like doing. That's one of the reasons I started writing on LinkedIn, because I wanted to counter a lot of the nonsense and ignorance and incompetency that I saw.
Sure. And
Yeah.
would you ever put that into a book, maybe, or?
Well, look, that is high on the list of doing. I just need to find the time to do it, but I would love doing that. And I do receive a lot of requests to do that. So yeah, I hope I can find the time to do it. But that would be great.
Well, look, Martin, I really appreciate you coming on to our podcast today. I think you've shared some really invaluable insights to our listeners. It's been a real pleasure. And obviously, for anyone who wants more insights into commodity trading, Martin does host his own Strong Source Commodities podcast. So make sure to tune into that, guys, for more insights and details around the commodity world. Again, Martin, thank you so much for taking your time up today to join us.
Thanks a lot. I really enjoyed it. Some really good questions, and I also see that you are genuinely enthusiastic. I think your podcast is a good idea, and I wish you well with that.
Thank you so much. It's a pleasure. Thank you. Thanks again, Martin. Take care.
Take care.
Bye-bye.